how can you make use of all this information, which will be market depth and which will be trade summary to help you in your decision, and especially very important for today, the use of market depth. Now, why is it important to have market depth? Because, all right, when we are investing or when we are considering to buy a certain stocks or sell certain stocks, right, there will be lots of and tons of questions that we have in our mind. For example, what's the question? All right, first you will be asking yourself, do I buy now or do I do a limit order? Okay, now if you were to do a limit order, then what price are you going to queue? Okay, if you queue to buy, then is this a good price or is that a good price? And sometimes when you decided to buy at a particular price, right, you realize, hey, look, how come after you bought, the prices kept falling and kept dropping? Okay, what's the reason behind? All right, why is it that when they hit a certain level, it will rebound? Now, the market depth will provide very good insight into your decision. In fact, that if you do have market depth together with your technical analysis, they are working hand in hand, because it's going to be more informed decision. All right. So what's exactly is market depth? Market depth shows you, right, the consensus from different group of people. And with this consensus, they decided to place a buy at a particular price. Okay, for example, at this price, let's say $10, there are 1,000 people or 1,000 lots of volume trying to queue to buy at this place, at this price here. Now, why is it that these different group of people, they could be people in other countries, they could be just retailer, or they could be professional fund managers? Why are they interested to come and agree on this particular price, all right, that they want to queue? Okay, now we are not here to answer why, but we are here to take a look at the outcome, meaning that if they are queuing at this particular price, we want to know, all right, if this is the price they are queuing, should we join them? Okay, so for example, when you have market depth information, it gives you one key important information, and that's to show you where's the very strong support or resistance levels. Okay, now sometimes when we look at a chart and we start to draw a line, but that line, you're not sure that whether that line is going to be correct, so you try to call your friends and your friends say, hey, look, I'm also not sure. All right, but what if many people at a different locations, different professionals, different method arrive at the same price level? Okay, now they took that price level and they translate into an action, and the action is to place that decision to buy at that particular price. Okay, so from these big blocks of bid and ask queue, we are able to deduce that at this level is a very important level that the market is considering. Okay, now let's take a look at the market depth information here. All right, I have again last Friday information from UOB, which is the market depth. Now if you take a look at the bid side, which would be the highlighted rectangle here, right, if you take a look at the bid side, you realize that the bid volume, all right, has been always a double digit. Okay, sometimes a single digit, sometimes a double digit, but at a particular price, okay, suddenly there seems to be slightly larger volume, and we can see that at 1910. Okay, 1910, we are seeing a volume of 102 lots, okay, which is larger, or much larger than the rest of the volume. Of course, that you can tell me, hey, look, Bini, I'm seeing like 1915, another 50 lots here, all right, and then, but that's basically it, all right. The rents are really less than 20, and slightly you have something here that's that's about 45, 40, but we are really seeing a huge volume coming in at 1910. Okay, now why is that so? Right, we don't know. However, this suggests that with the market depth information, many people, all right, or many volume are queuing here to buy. Okay, queuing at 1910 to buy. So from here, we can deduce that this could be a very strong level. Now, one thing to judge that this is a very strong level, we can take a look at the few bits higher than 1910. Okay, we can start to see, for example, at the 1911, there's a slightly increased in the number of queue. Now, this could suggest that the validity of 1910. Okay, this means that people are not willing to wait. They are waiting, or they want to get the ahead of the queue, so they are queuing one bit higher, which is 1 cent higher, just to make sure they can get in earlier than the bulk of the volume at 1910. Okay, now very important is that once you have the market depth information, all right, please do go and check back, the reason why, all right, there's this 1910 level that people are interested. Because usually when you have the market cap information, what I like to do is I like to check back with my price chart. So what I did is I checked back with the UOB price chart, and I realized that at this point here, all right, at this point here, and I mapped in the 1910, which is the black line here, all right, at this point here was a previous low. All right, now this previous low was happened to be quite significant, because at this low it bounced. Okay, it rebounds from 1910 to move towards 2050. Okay, it means that the market is watching this level, and this could be a very important support level. All right, in fact, that we are seeing today UOB, all right, hitting around this region, and 1910 became today's high again. So that it means that 1910 is a level that people are interested in. Okay, that's a strong hidden level. All right, now, apart from key level that we can see from market depth, we can also use the market depth information to help us to deal with intraday levels, especially if you are trading intraday and you are interested to get in on intraday trading or on the sub levels, right, apart from the very strong levels. So we can use market depth to help us. Okay, let's take a look at this information here, all right, on Parkway Live reads. Okay, let's skim through. You can see those that are highlighted are particularly volume that's slightly higher. How do I know that it's slightly higher? We look at it like a block. So this will be a block of volume here, all right, with this as a double digit, and then we have here at 44 lots, right, queuing at 415. Okay, now if you take a look, then the volume as it moved down, it's declined, and into this next block here, all right, we see that the volume is coming in at 410. Okay, slightly on the double digit here. Now, very important, if you move down, you start to see, hey, look at this wonderful level, $4, right? The volume was 344 lots. Okay, so that's really very high if you consider the pattern here. All right, it means that the market is really looking at buying this stock or queuing to buy this stock at $4. Okay, why is that so? We don't know. All right, but all of them, all right, they reach a consensus to say that $4 is a very important level for this particular stock. Okay, now with the sub levels being 410 and 415. Okay, now what I like to do is always that once I have all these key levels, I will go to my chart and I map that out. Okay, especially for intraday trading. All right, so what I did was that $4, I mapped it out. It happens to be around here. That could be a round number effect. But once I map out the 410, so what happened to 410? This stock is actually moving higher, near to the 52 weeks high or all-time high. 410 happened to be a spike low, okay, and a previous high. All right, when I have 415, it happens to be at the 415 here. That happens to be one of the recent low that we are seeing here. In fact, if you look at the performance of Parkway Live reads, right, during this week, Monday, Tuesday, Wednesday, 415 happens to be the lowest price of this week trading. So people are identifying all these key levels and using all these key levels for their decision. All right, now I talk about the left hand side. Then how does the right hand side help us? Okay, right hand side, which is the right column, will be the volume that traders, investors put in to sell. Okay, meaning that instead of selling at the current level one, which is the current price at 419, some people say, hey, look, perhaps that the stock can move higher, so they like to sell at a higher price. Okay, so essentially these are volume which forms your resistance. Okay, because these are the selling pressure. All right, so if you take a look scan, you realize that very important levels came out. All right, 3 digits here, 425. Okay, 425 at 211 lots. All right, we've 423 at 57 lots and 430 at 42 lots. Right, perhaps you can read it as that 425 is indeed a very strong level, and some people are trying to get in earlier to make sure they can sell, so they want to sell at 423. Okay, so these will explain the slightly higher level here. As I explained, right, there are some people who are willing to get in earlier. There are some people who are willing to exit earlier as well. Okay, so we have also another key level here, that's resistance level at 430, and at this moment we don't have any important levels. And then from the market depth we have the next level coming up at 440. Okay, so the right hand side will form what we call resistance or price ceiling. All right, especially with the market depth, you can look at your chart and to confirm why. All right, 425 is very important, and to confirm why is the market looking at 425. Okay, so let's take a look at the chart here. Now, what I did is I mapped in the 425. All right, then 425 happens to be the all-time high for the stocks. Okay, now the market depth becomes very important, especially for stocks, right, that's hitting all-time high, because you don't really have historical price reference. All right, so once what happened and what's the important price after 425 is broken, assume that it's broken later on. All right, then with the market depth, you know that the market is looking at 430. All right, and 440. These are the important price levels that people are looking. All right, they so happen to be round numbers as well. Okay, now what's also very important with market depth will be also hot stocks. Okay, stocks that really move a lot. And I wanted to give you this how to say example, because you know that recently the medical stocks, and especially stocks that is dealing with COVID-19, all right, they are moving very well, such as this stock, which is Top Glove. Okay, so Top Glove has been moving quite well, and it is in terms of its trading range, is actually quite wide. Okay, so when you have all these very volatile wide ranging stocks, right, so the market depth can offer you very important levels. Okay, now so let's take a good scan into the market depth on the September 18th. So let's last Friday. All right, this will be level 1. So level 1, you don't really have quite a lot of volume, but we start to see, for example, the queue building up. Especially look out for blocks of volume, all right, section by section at 260. Suddenly, instead of a double digit, all right, we are seeing 260 having a triple digit at 217 lots. Okay, now you can take a look at, in comparison, what is the meaning of high volume? It's in comparison. It's always relative to what you are seeing here. So in comparison, the reds are double digit, all right, and you don't really see a lot of queues hitting above 50. Okay, we start to see, for example, 260 having 217 lots, with 261, okay, slightly elevated in terms of the volume at 74. All right, so this means that there are some people who saw the 260 level. All right, they are not willing to wait because they're afraid that it might not go to 260. Right, so they want to go in earlier, so they're queuing at the 261, one bit higher. So the slightly elevated volume also give us a reason to believe that the 260 is a very, very important level. Okay, so look down again, block of volumes, look down again, we have 255 having also 146 lots, and then very important, we have the 250, 380 and 248, 150. So key levels being mapped out, right, in Top Glove, there will be 250, 380, 255, 146 and 260. Okay, so that's the support level that we have. Okay, it happens to be also round number because like in 5 cents difference, right? 260, 255 and 250. Okay, now the right hand side will give you a good clue about the volume to sell, volume who are queuing to sell. Okay, queuing to sell, we have 272. All right, that's the resistance. We have 3 digits here. All right, then we have 275 and 280. Okay, so these are the key volume to sell. Of course, that you can see block of volume coming in, block of volume meaning at 274 and 275 we have 3 triple digit as well. And then at 275, 279 we also have quite a significant volume. Okay, but key levels are all here. All right, so what happened is that Once you have all this from the market app, you can take to your chart, especially intraday chart. So I have a 1 hour chart here. Okay, that is to map out the very important levels. All right, so let's try to understand why the market is coming out with all these levels. Okay, so for example, 248 and 250. Right, so it so happened to be a spike low. So this is the reason why the market is forming a queue here. They hope that it can spike to the low here, and then they can get a discount. Okay, now next is that why is it that they are looking at 260? Okay, so 260, I sort of skipped 255 here, right? So why is it that they are looking at 260? Because, all right, so that's a previous high before it gap up, and then that's also one of the recent low here. So that's important level 260. Okay, now in terms of the resistance, why is it that they're looking at 272? For example, 272 happens to be one of the recent high and then a recent low. It happens to be like a zone. So 272 to 275, all right, was a previous support. A previous support becomes a resistance. And of course, that we have 280 being important here. Okay, so once you have the level being mapped out, you can see that that becomes like a trading guide for you, a map for you. All right, and for information today, top glove, all right, the high, all right, today was about 271. So it fit the market app information that's being mapped out here at 272 to 275. Okay, so the high was 271. If you look at the intraday low, for example, today low, right, it happens to be 258. So we have the 260 region coming very strongly, right? So 258 happens to be a spike, and those who are queuing here might have gotten their queue filled. Okay, and Monday low was 255. So all these happens to be very important trading range guiding the market. All right, who are trading into top goal of for at least for this week. Okay, now with all this information that you can map in on the intraday, then you can use the market app to form your stops and limit orders. Okay, stops means that places that you might be thinking of putting a stop loss, and limits will be places that you want to put in a buy queue for you. Okay, so rather than you guess a level, you can use the market app, all right, information together with a price chart to form a limit order. Okay, at the same time, you can use the information to gauge the sentiment of the day. Okay, now let's take a look again at another stock, SGX. SGX had a breakout, a very strong move on Friday. Okay, so that was a Friday. Okay, strong move. Okay, it moved up by 34 cents. Okay, so that was a strong move. Okay, now you saw that SGX had one of the highs here and another one more high here. So what I did is I map out all these levels and in conjunction and to read it with market depth. Okay, now I'm just going to take information which are further away from the current level 1. So I'm just going to skip this, but just to move down to spot for key levels. Okay, so I'm seeing at the 8.83 another 22 lots here. So that's slightly the bigger in volume queuing, and you can see blocks, right? For example, 880 as a block here. All right, and then you can see 877 and 876 as a block here. Okay, so all these are all blocks of volume coming in. Of course, we have a slightly a block here, a slight block here at about 888, 889. It's not very clear in terms of differentiation. Okay, but let's take a look at the right hand side. In the right hand side, we have a huge block coming in. We are not talking about the level 1. Okay, I'm interested in other prices other than level 1. Right, we have $9, all right, coming in as a triple digit. Okay, 190 lots here. All right, you might be asking, hey, look, what is it that the market is looking at? Why are they pinpointing $9? Okay, so what does these two information provide you? What do these two information give you? Number one is that you can use this information to plan for your entry. So if you think that, for example, SGX is good for entry because this is a good breakout, then you can use this, right, to plan for your entry. So what can we do? All right, because they are buying blocks here, so you might want to consider what we call retracement. That means for price to retrace to possible support. So instead of buying on the breakout, okay, because you fear that in by buying at a high, you want the market to settle down, and thus you'll be looking to buy at possible support level, which we call intraday support level. So the 888 could be intraday support level, 883, and if you are looking at even lower price, you can consider in the region of 880, and you can consider in the region of 877, 876. Okay, now, so for example, if you like to do intraday, all right, then you'll be looking at to put a buy limit around 888, okay, with a stop loss below 888. Of course, that would be a tight stop loss. Okay, now if you draw on your chart and you found levels which are important, all right, then you can consider 883 or even at the lower block here. Okay, now just for information, SGX actually traded on the Tuesday low at about 876, which is the lowest. Okay, happened to be around here. And today, all right, just on today, the low for SGX was around 885. So the whole block gives you a clue on the places, on the levels that you can put in your limit order. All right, now coming to $9, okay, because let's assume we talk about the buy price, right, where you want to get in. We are also interested in where you want to exit the trade. All right, so rather than to scratch your head, rather than to call your friends, then we can use market depth to make informed decision. Okay, because remember, market depth gives you the consensus of what others are looking at as well. Okay, and they take that particular information they derived and translate into action, and the action is many people are queuing, all right, to sell here. Not many people, but many volume are queuing to sell here, okay, at $9. Okay, now not only at $9, we do see some clusters coming in at 903 and 905, all the way from 903 to 905. So some might be thinking, hey, look, 9 is one possible price level, but I might want to try my luck to try 903, 904, 905. Okay, now this also means that because these are the key resistance, it means that unless until this resistance are being cleared, meaning that this group of seller, they are being transformed into buyers already, or people decided to buy higher than 9 or even beyond 905, then will the resistance be broken. Okay, so let's try to understand why is it that people are looking at $9. Okay, now SGX had a gap down, all right, so there was a gap down, and $9 happened to be the highest price of that gap down day. Okay, so people are thinking, hey, look, so this could be a possible resistance coming up. So therefore, on the day of the breakout, okay, they are looking at $9 coming in at a strong resistance. So for example, if you are looking at chasing price, okay, and you're asking, hey, should I buy now at 893? Then you have to understand that 7 cents away, all right, there will be a strong barrier coming in, a price ceiling coming in. So perhaps that you might want to let price retrace a little bit, come down a little bit, perhaps to move towards the 885 region, so that at least 885 to $9 you do have some space here. Okay, so that becomes your intraday trading strategy, something to add on to your intraday entry and exit decision. All right. Okay, now with the trade summary, we are also able to sort of form an opinion, all right, of that particular day trading by looking at the volume being traded at the ask side versus the bid side. Okay, so let's take a look at what happened, all right, for SGX on a Friday. All right. If you take a look at the Friday trading volume, we have more volume, all right, at the ask side, trading at ask side, meaning that buyers are not willing to wait, all right? So they are aggressive, they are interested to buy at a higher price, okay, versus the volume here at transacted at the bid side. So from here, all right, as long as you're going to see a huge difference, okay, I'm talking about really relatively huge difference, at least twice, okay, we can see that it's almost near to twice, right, the volume, then you can sort of gauge that the sentiments are tilted towards more bullish, because buyers are motivated to buy at the higher price. Okay, sometimes you do see quite a huge difference. Okay, I've seen difference of like 8 times, 10 times, and then after that, right, after a while, the stock really moved very well. So do check your trade summary at the end of the day to take a look at the difference between the volume between the ask price and the bid price.